today's Cardinal lesson, the numbers just came out for 2024 IRMAA. People say, what? IRMAA? Well, we work with people turning 65 a lot. A lot of these videos are picked up by people turning 65. They're going on Medicare. They're coming to us to learn about Medicare insurance. We're always asking them about their income because of this thing, IRMAA. So if this is the first time you're hearing about it, stick around. If you've heard about it before, maybe you're paying it, maybe not, but now there's different thresholds, different numbers. All the new stuff came out from CMS, and we're going to be going over this today in a good bit of detail so that you understand it and what you can do about it. I want to bring Tom on, and I want him to talk about why we're doing this video.
I think the main reason we're doing this video is really to educate you what IRMAA even is. A lot of people have no idea what it is. We get a lot of people coming in that they get this letter saying you have to pay more for Medicare, and they don't even know why. They're confused. They're angry a lot of times. And so what we want to do now or today is really explain what IRMAA is, put it in a proper context, not necessarily do all our planning to avoid it, but if there's windows and things we can do to minimize it, great. But I've seen extremes really. I've seen people who do everything to avoid this, and then some people who don't know about it, right? We just want to get you somewhere in the middle where you know about it. It's part of your decision making process, but it's not the main driver of everything you do. I'm also going to pull up the show notes here before we just jump into the board. These show notes can be found the link below this video. They're also on our website. A lot of people print these out. You can get it, look at it a little more closely than just on the video. But we have the picture of the board. We have the release from CMS that talks about what the numbers are. I'm not going to spend a lot of time here. We've really summarized it all on the board, but this gives you some more details if you're looking for more information.
Okay, so we try to avoid acronyms here on the Cardinal show because acronyms, just especially people out of the industry, it just confuses them. CMS, the paper that Tom showed you, is Centers for Medicare Services. That's the government, the federal government that administers Medicare. IRMAA stands for Income Related Monthly Adjustment Amount. How's that for a name? An innocuous name. People are like, what? And I don't think it was intentional on the government part, but people just come up upon this and it hits them and they had no idea. This isn't like big news, press news, except maybe on the Cardinal show. So we're looking for these things to come out. We're going to refer to those that it applies to as high income people. And, the federal government's going to tell you whether you're a high income people or not based upon these numbers. IRMAA, Income Related Monthly Adjustment Amount. And we even have some old cartoons about Aunt Irma and that kind of thing, but we'll just get down to the meat of things here. So this is extra Medicare Part B and Part D premiums. So the standard premium in 2024 for most of the people that are on Medicare is going to be $174.70 a month. So it's going up about $9 a month. And then for Part D, this is just an average premium because you don't pay your Part D to the government. You pay it to the Part D company that you've chosen, or the Medicare Advantage plan that you've chosen. Most people are probably in the neighborhood of paying $10 a month, $20, $30 a month, but they're showing the average of $55.50. This is the standard number that everybody that pays for their Medicare pays. And then the people that are the high income people, depending on how high income they are, and depending whether they're single and filing an individual tax return or they're married filing jointly, it's depending on how high income they are, they're going to pay extra amounts. So this number gets added to the $174.70, and this number gets added to your Part D premium. And for those of you that are on Social Security, they take this out of your Social Security check. If you're not on Social Security yet, you're just 65 and going on Medicare, you're going to pay this in a quarterly payment to the government. So, and we can explain all this to you individually when you call us about Medicare, or if you're another type of client and you just want to know and get an idea of what this is going to be, we can help you with that. Now, the thing that makes it even a little bit more confusing is they use your 2 years ago tax return. This is the part that people really get sometimes angry about. Is this comes upon them, it's a surprise, they didn't know about it, and then it's all of a sudden 2024, they're just turning 65 or they're just going on Medicare after 65, and then they're using the 2022 tax return that's already happened. I mean, it's not like you can go back and do some planning for your 2022 tax return because it's already filed and done. So they're going to use the 2 years ago number, which 2022, to determine how much extra you pay, if any at all, for your Part B and your Part D. Okay. Now, the threshold for IRMAA period is if you're under $103,000 filing single in 2022, then you're going to be one of these people that just pays this. So that's the threshold, that's the number. If you're married filing jointly, it's 206,000. So if you say, well, how do I know what that number is you find your adjusted gross income on your 2022 tax return, your AGI, and then you have to add a little bit to that if you have any tax-free bonds or tax preference items to come up with the real number. So if you own tax-free bonds, you probably want to call us or call your tax person to figure out what your MAGI is. But nonetheless, for most people, it's just their AGI. If you're over 103,000 or you're married filing jointly, you're over 206,000. And then how much you are, this can be as much as somebody that has had an income in 2022, a married couple that was over 386, they're paying an extra 279.50 and an extra $53 a month for their Part D, and that's each if they're a married couple. So this adds up. It's significant. We want to plan for it, but some people get so upset about this that they start doing all kinds of planning, or they ask us to do that to avoid this. And sometimes that puts them in a worse position. So, like, especially we see this around Roth conversions, where it makes sense for people to do a large amounts of conversions in their 60s, of Roth conversions, which is going to drive up their income and cause them to pay some of this. And they stop all that in order to avoid this. Well, we're going to have to balance one against the other. So I want to bring Tom on, and I want to just hear what Tom wants to add to this.
Yeah, man, I think it's important, and Hans mentioned this, but I just want to be very clear: is they use your income from 2 years ago, and so if you're in 2022, which is when this video is being released, anything you do this year to create income will impact your Medicare cost in 2024, 2 years from now. And so where that comes up is if you're doing things like Roth conversions or taking money out of an IRA or selling like a property, maybe you have a second home or a rental property and you're selling it, those capital gains get brought onto the tax return. And so even if your income isn't normally this high, but you have some of those one-time events that really drives up your income in any given year, could cause problems with this IRMAA. And so you just want to be aware of that when you're making decisions. And again, a lot of people don't even know about it until after the fact when it's too late to do anything. And so I think that's important to know. But also important is you just need to put this in the proper context, right? This isn't you shouldn't do everything you can do to avoid this. I mean, I've had many clients come in, they get this letter, they didn't know it was coming, they're really upset, and I said, I'm never paying this again. I'm going to do everything in my power to stay below these thresholds. When in the meantime, they're really missing some really good planning opportunities around Roth conversions, around other types of things because they want to avoid this. And so you just need to make sure that it's part of your decision making process, but it's not the main driver, right? This just needs to be a factor, not the main thing you're focused on. And ultimately, if you do have this happen, and let's say you have a life changing event where you retired, or you maybe unfortunately a spouse has passed away, or you've gotten divorced, or something like that, there are a bunch of different strategies or things that happen, life changing events that allow you to appeal this. So we're doing a lot of planning where we're doing things while people are, retiring, or maybe they retired this year. We're doing some Roth conversions this year. When they get the IRMAA letter 2 years from now, we can appeal it because they're no longer working. So I would also say maybe don't try the appeal on your own. Some people it goes fine. We've had lots of people who've tried it. It's gotten denied. They come to us. We help them with it. It gets approved. You just kind of need to know, how to fill out the form, what information to provide, what information not to provide, in order to potentially reduce this down to hopefully either less or nothing, just depending on your situation.
Well, the typical case for an appeal is the person who made a lot of money pre-retirement. In 2022, they were 63, and now in 2024, they're turning 65. They're going on Medicare, and they're retiring, or they retired somewhere in between, and they had a high income in 2022, so they get bumped up to here. They sit down, we help them with an appeal. They still have to file it themselves, but we help them word the thing. And then we just plan out their income. So it's less than this if they're a couple, less than this if they're a single. Um, and then we just project that going forward. And most of those are going to get approved. I mean, if the numbers are all accurate and we're not creating some sort of a fictitious presentation, uh, projection going forward. So um, this can be appealed. Don't overreact to it. You need to consider this. We do, if you use us for financial planning. We're in all 50 states and DC. So if you want us to help you with something, we work by Zoom, we work by telephone. Um, we can help you and we can think our way through this. They'll also, if there's a death of a spouse, a divorce, a marriage, those count for appeals. I don't think this is serious enough to die for. I mean, that's one way to make IRMAA go away, but I wouldn't necessarily recommend that. So I just want to hit the boxes here. We have talked about taxes because, in a way, this is a tax. We've talked about income because your income in retirement matters for this tax. Um, we've talked about Social Security because this is going to come right out of your Social Security check. I have some very well-to-do clients that didn't even know they were paying this because it just comes out of their Social Security check. They thought everybody pays this. So with that, I want to bring Tom on, and we just want to thank you very, very much for listening to us.
Thank you.